Let's get more on today's session. Chris Conway joining us from the Australian Stock Report live out of Melbourne. Chris, good morning to you. A good day for the session so far. We're up close to 1% for the broader market, but when you look at confession season and some of the news coming out of stock specifics today, it's not looking too good for what's coming up in reporting season.
Good morning, guys. Yeah, look, Ingrid, I totally agree with that. Nice pop today. On the back of a big rise in oil prices overnight. Probably a little bit disappointing. Hopefully we continue to rally throughout the rest of the session. But yeah, you're exactly right in terms of confession season and earnings season. There's an underlying current that commodity price weakness and volatility is going to weigh on companies in general. That's the theme that I'm taking out of some of the results this morning. But that's not surprising. It's largely expected, and it's all going to be about those companies that do have top-line growth and sustainable growth, as opposed to just cost-cutting measures which we've seen over recent reporting seasons. So, as you say, very patchy and probably a mixed bag coming up.
What are you liking so far that you've seen on reporting season?
So AGL this morning, the $10 million impairment charge doesn't worry me in the slightest. I really like that they're divesting those oil and gas exploration assets. They're going to focus on their core business, which they're particularly good at, and that is, of course, commercial and retail gas. And that stock has been a trend trader's dream of late. It's just kept going ever higher, and I think when I was walking to the studio this morning, was up again on the day. So I like that. South 32, obviously, the impairment that they've raised this morning wasn't as bad as what everyone expected, so seeing a nice pop there. And Macquarie is the one that surprises me a little bit this morning in terms of the share price sell-off. I think that's a little bit a bit of an overreaction. When you bottom line it all, this is a company that's, if they follow through, is going to have the second best profit result on record. And it has fallen 20% year to date. So I think there's a buying opportunity there for those who are willing to take on the risk.
Well, what does this say about reporting season coming up as well? When you have a good result and it looks good to the market, but maybe just not as good as expected, are we going to see huge declines in share prices? Does this say something about valuations?
Yeah, potentially about valuations, but also about expectations. And again, I'll refer back to the Macquarie example. The last time they provided guidance, they said that they were expecting a material increase. Everyone, said, well, Nicholas Moore, he usually under-promises and over-delivers. So a great expectation was built into that, and everyone thought that there was going to be a crazy number delivered in May. They've obviously tempered that today, and it's sold off to the downside. So yeah, back to your original question, Ingrid. I think when companies do miss, if it's a good set of results and they miss by a little bit, the damage shouldn't be too bad, but it's when they're missing by a considerable amount, then they're going to get absolutely hammered. I think that's probably the theme that you'll see play out through this reporting season.
So you kind of put Ansell into that category today?
Yeah, most definitely. Well, down 20%. Obviously, the market is very, very unhappy with their update and their numbers, so getting absolutely punished.
What are you liking in this sort of environment?
So gold, I hate to sound like a parrot, be repeating myself week after week, but gold is a space that we continue to like. RRL is what we're involved in at the moment. We are on the long side from a trading perspective in NAB. Obviously, the Clydesdale demerger, the stock list today. Had a pretty good session overnight. Hopefully we see some follow through in Australia. I think that comes online, or did come online at 11. I'm assuming the hour has ticked over while I've been on air, guys.
It's barely, yeah.
What else do we...
Carry on.
Sorry, what else do we like? Again, if you've got a longer term perspective, some of the mining plays, interesting today, South 32, nice pop, impairment wasn't as bad as expected. BHP looks oversold, up 6% today, again when I was walking to the studio. So there are some stocks there that if you do have a longer term perspective, then in the mining space, I think there's an opportunity to pick up and add to a portfolio.
Energy's just looking like a day trader's idyll at the moment, though. These swings are clearly not fundamentally based.
No, absolutely not. And the swings in oil are not fundamentally based to any great extent either. Sure, we had Russia come out overnight and say that the door remains open. Well, I'll tell you what, when they finally put a deal together where everyone agrees and the production cuts are actually stuck to, I'll probably eat my hat.
Yeah.
Until then,
about the same time as Putin leaves the Kremlin.
Yeah, well, exactly right.
So,
it's just not likely to happen, is it?
Waiting for God.
So, you know, if a market's going to jump 8% on a what if and a possibility, well, as you say, the fundamentals are completely out the window. More broadly, however, that market remains in structural oversupply, and again, I've said this on the show many times before, guys, structural oversupply until some very hardcore decisions are made by lead producers in the world in terms of scaling back production, then that oversupply will remain and pressure will remain on oil price. I'm not saying they can't go higher, but there will be an overhang in terms of pressure preventing them from pushing significantly higher or there being any fundamental change in that market.
Yeah, certainly is a short-term reaction though from energy stocks, isn't there, when you see Santos up 7% today and Woodside up almost 4%. Anyway, Chris, we'll leave it there. Appreciate your time. Thank you.
Thanks, guys.
Chris Conway there from Australian Stock Report.